We've got someone. Let me turn the waiting room off so people can just come on in. Come on in. How you guys doing? This is Dr. Greg McLeod from Elite Traders University. I'm a 30-year Wall Street trading veteran, and I'm going to share my insights in the market with you on this beautiful 26th of March, 2026, right? It's springtime. The war is still raging on, and the dollar is surging. So we're going to go break it down for you. And let me go ahead and get our share our screen. Oh, make sure we have a recording going. There we go. Bulls versus Bears weekly forex forecast. There we go. We got to have that going on. So I might have to start my little introduction again. This is for 326. I know there's something missing here. Okay. All right. Start recording there. Active speaker, gallery view, audience view. I don't know what that is. Okay. Active speaker. Active speaker is going to be me. I'm the active speaker. Okay. And got my microphone going. Streaming is going. The recording is going. Hi there, guys. This is Folks and Folkaroons, ladies and gentlemen. My name is Dr. Greg McLeod. Welcome to Bulls versus Bears, the strategic market forecast for this week ending March 26, 2026. So it's spring in the air, and so is the smell of high impact explosives. And so we're going to go into the market and give you my insights of what to look for in trading for next week. Okay, so let me go ahead and get our slides. Okay, and then we're going to go right into our new thing. All right, the new week. Hope you guys are doing well. Hope you guys are having a great day. It's a great day to have a great day. And okay, boom, boom, boom. Okay. PowerPoint's taking a break too. So it says it's processing, right? But I tell you what, the dollar is back in the driver's seat, and it's beating up on not just the currencies, but it's also beating up on the it's taking out the metals too. And the short silver trade has been a very profitable one for many of our students. Also, the short euro trade as well. And so let's go ahead and file and no. Go back and view. And there we go. I'm going to share the screen. Give me a number one in the chat box if you can see my screen. We're going to share the screen right there. And share screen 2. Share sound. Okay. And here we go. All right. Welcome to Elite Traders University presentation of the Bulls versus Bears, the Strategic Global Outlook. My name is Dr. Greg McLeod. It's so good to be with you here on this wonderful Thursday, terrific Thursday. And we're going to look at the market. Okay. Before we get started, I want to direct your attention to the risk disclosure on your screen to make sure you understand all there's associated with foreign exchange trading. This is not a solicitation for investments or anything like that. It's purely for educational and entertainment purposes. And my goal here is to educate you and to entertain you. But if you happen to make money on the side as well, then that's all you. You keep all the profits, and give me a nice shout out. Also, remember we have our school community. I want to thank you so much for being part of that community as well. Okay, let's go ahead and move along, Mr. PowerPoint. Mr. PowerPoint is there. We go. And again, I've been doing this for a really long time. Been doing it for over 30 years and love every minute of it. They say if you enjoy your work, it's not work at all, and that's what it's been. And I also invite you to be part of our trading community. And if you would like further help from me as your mentor, you can reach out to me as well. You can type scalp in the chat or in the comments below, and we can arrange a time where we can talk and see how I can help you reach your financial goals. Okay, let's get right to it. All righty then. The Gold Rush is in, and our Gold Rush blueprint is available on sale. And then, but let's talk about the agenda. We're going to talk about the U.S. dollar index, the euro, the pound, the Aussie dollar, dollar yen, dollar CAD. Those are the forex majors. Those are the major currencies that provide 85% of forex volume because why they have the U.S. dollar in them. We're going to take a look at gold, silver, oil, the S&P 500, but we're going to start with economic news, and we're going to use my favorite tool. We're looking at economic news. My market heat map. It's an arrangement of currency pairs by percentage change. Tells us what's hopping, what's popping, what's dropping, what's not in the market. And so let's go ahead and load that up. And it's $19.99 a month. It's a pretty good deal there. But you can access it for free. Just go to www.mymarketheatmap.com, scroll to the bottom, and you'll get one of 6 powerful heat maps. And so this is what I use every morning to, in fact, I was trading dollar yen today. Pop the video, drop the video hot on the ticket. If you have not seen the video, you can go ahead and click the link and get access to that. Don't go there now. I actually showed some supply and demand zones, some really good stuff that you can use in your trading. Okay, so in fact, the dollar, see, you can see it clearly. It's in the driver's seat, while the risk appetite currency pairs are currently getting their butts handed to them. Right. So very, very cool graphical display. And let me go ahead and get you that link. I'm gonna actually pop that link down here at the bottom in the chat. If you want to bookmark that and watch it later, tell your friends and share it. There we go. That's what you can share if you want to share something. Share a link and let people know about what we're doing here at Elite Traders University. Okay, economic calendar. My favorite part of the. I actually love the economic calendar. Why? Because the problem that most traders have is they don't know what to trade, and they don't have a clue. So what I do is I go to the economic calendar. Again, you can access it for free at My Market Heat Map. Go to filter it down to just the high impact items, right? That we want. All these are wonderful countries, I'm sure, to visit, but I don't care about their news. This will give us the majors that we trade that you'll find on the trading platform, right? And we're actually going to move ahead to next week and look at what's going on for coming up. That's too far ahead, right? We want 23rd. There we go. Monday, March 30th. All right, this is what we're going to look at. Monday we have, and I call this fun with flags. We're going to look at the flags, and basically the economic calendar tells us what to trade. Why? Because people are going to be interested in trading. The big institutions and hedge funds are going to be trading that. Now, I don't recommend that you trade the actual news announcement at that hour, but we have a news feed strategy. And if you join our group, you can find out more about that. There's a post inside of our school community where we actually get in 30 minutes to an hour after the news while the big fish are reading the announcement before they jump in. That's why you see volatile price movement around the news, because there is little liquidity, very low liquidity, and so you have erratic price movements. Why? The big dogs, the big sharks have pulled out of the market, and they're basically as retail traders like dueling back and forth, right? Now, after the analysts and the researchers and the traders digest the information, even the bots now can read news. Once they digest the impact of the economic report, what it actually means, then they enter the market, and then that's at 30 minutes to a half hour, even less now because we do have AI reading news now. Then that liquidity comes back in the market, and the market chooses the direction it wants to go, and that's a perfect time to go because now you have all the sharks. They basically chum the water. There's fresh blood in the water, and that's when we can take the trade, right? And so if they're talking about, like Monday, they're going to be talking about the Germany inflation year on year. They're part of the Eurozone. We can't trade the Deutsche Mark because it doesn't exist anymore, but we can trade the euro, and that's where the interest will lie in the market. So we just go by the flag, and so we would look to trade that, and that narrows the focus down from all the hundreds of different currencies to trade and different instruments and cross rates down to one trading idea, right? Actually, there's a couple of trading ideas because you can trade Euro CAD, Euro Swiss, Euro dollar, Euro yen, right? So, but you get the idea. So inflation rate year on year, they expect the inflation to tick up from 1.9 to 2.6. That can be positive movement for the euro because higher rates would lower inflation. Later on, we're going to have the Australian dollar. See the Australian, so we're going to look at the Australian dollar, another opportunity to trade. They have an RBA meeting minutes, which is a report on why they raised interest rates. So they're going to give us an analysis of why, the breakdown, the lowdown, the nitty gritty, the skinny on why they raised rates 25 basis points. And so we'll find out that, and that comes out at 8 o'clock, 8:30 on Monday. And I love trading Australian news. Then we're going to have some Chinese news, and even though we don't trade the Chinese yuan or the renminbi, as it's called, we can trade one of its trading partners in Australia and New Zealand. China is their largest trading partner, and so it's often said that when China catches a cold in their economy, Australia and New Zealand will catch COVID, right? So the big dog wags the tail, right? So we can trade. If we have good news out of China, usually it's good for the Australian dollar and the New Zealand dollar. Okay, that's what we have it on there. Tuesday, March 31st, we're going to we have the French flag, we have the Italian flag, we have inflation rates year on year, very important number with the the surge in oil prices, gasoline. That's going to impact every item because things are transported on trucks, on trains, on planes, on automobiles. Everything, which stuff that you buy from Amazon rolls on trucks. Okay, now they use electric trucks, but still, most of the stuff comes by fossil fuels. The backs of dinosaurs or the remnants of dinosaurs. That's what's transporting our economy, and so we're going to see a tick up inflation, and usually currency rates will rise because of inflation. So you can see, well, gee, oil is up, then everything else is going to go up too, which means the currencies are going to have, the central banks are going to have to raise interest rates in order to fight inflation. So usually higher inflation means a higher currency, but again, we're going to look at the technicals to verify these fundamentals, right? Now here's the European flag here, not just one country, but the whole European, the United States of Europe, the whole confederation. Inflation rate year on year, expect to rise from 1.9 to 2.2. So again, we would trade the euro. So the euro is going to be very much in play Tuesday, March 31st, the last day of the month, right? And then we have more inflation data. 8:30, our U.S. news cycle, but won't be any U.S. news. There'll be Canadian news. We have GDP, very important, supposed to drop from 0.2 to 0 in Canada. And they're also looking at their month-on-month preliminary rise from 0 to 0.1. So the Canadian dollar will be in play. You can trade CAD yen, CAD Swiss, Aussie CAD. You get the picture. 10 o'clock, there's also a 10 o'clock news cycle. And 10 o'clock is where you'll find another set of news from the U.S. We have the conference board. CB doesn't mean 10-4, Roger, rubber duck. No, CB stands for conference board. Conference board consumer confidence, as they go and they survey people and ask them, a bunch of questions. Are they confident about what's going on with their purchases? Are they happy about the economy? We expect it to drop from 91.2 to 86. This impacts retail sales because if they're not confident about the economy, they're probably going to be hesitant about making big purchases, which is a negative for the economy, which actually would be dollar positive because the dollar rallies on bad U.S. news, and so we would probably see an increase in U.S. dollar, yen, dollar CAD, dollar Swiss, right? JOLTS job openings as well. Now, I'm going to put this into a perspective that other countries, when they have positive news, their currencies rally when there is positive news. The U.S. is unique in that because we are the reserve currency of the world, and people, typically traders and investors around the world, run to the U.S. dollar for safety and protection as a flight to safety, as a flight to quality, not necessarily as an investment for a risk investment, which provides a high yield. Because when you're buying dollars, you're getting into bonds, and bonds are typically going to yield 3%. Well, why would you want 3% when you can invest in the S&P and get 8, 9, 10%? You're right, or invest in your emerging markets. Your emerging markets provide a high yield too. However, during heightened risk thing, higher anti-risk things like we have with the war going on, people are less likely to invest in riskier assets. Riskier assets give a higher yield. They're going to run for safety, run to the U.S. dollar, and that's why when we have negative U.S. news, or it's going to be beneficial for the U.S. dollar as a safety play, a safe haven. Okay, I hope that explanation was helpful. Go ahead and let me know in the chat box. That was it was clear that you're tracking. That was helpful, because a lot of people hear good news and they'll go in there and they'll start selling, or they'll start buying the dollar. Or good news in other parts of the world, and they'll buy dollars, and then the dollar will drop, right? So let's go ahead and we have Tuesday taken large manufacturing index. I really don't find much movement in the Japanese currencies, the currency, the yen pairs, on any news other than maybe an interest rate announcement, right? Rating Dog, I like that name. Rating Dog Manufacturing PMI. Rating Dog, woof woof. Again, this is from China. We're going to look for a drop from 52.1 to 51.7. That could be detrimental or disastrous, or cause the Aussie dollar and Kiwi dollar to drop. They're already in locked in downtrends right now, so that's good. Magnify that. We go to Wednesday, April 1st, April Fool's Day, and hey, the war is over. No, it's April Fool's, right? We're going to have again the euro. We have European flags, and we have PMI, Purchasing Managers Index, S&P, the Standard & Poor's Global Manufacturing PMI. This is when they survey manufacturers to find out, are they bullish? Are they going to start manufacturing a lot of stuff? They might say, no, we don't have. They might look at the consumer confidence and go, the people aren't buying, so we're not going to make anything. So this is another survey that gives us a glimpse at the economy, right? And so it's supposed to actually rise from 50.1 to 50.2. And we have another PMI final out of Germany, supposed to rise from 50.9 to 51.7, right? Now, a lot of this manufacturing is coming from the defense industry, and if they need more missiles, bombs, tanks, mines, and anti-aircraft stuff, that's probably who's benefiting in this, right? Then the unemployment rate out of the Eurozone comes out as well, 6.1 in unemployment. Okay, not doing so. That if it goes higher than that, it could be bad for the euro. Euro still holding around the 115, 116 area, right? We'll take a closer look at it later on. But here's our U.S. data. Finally, we have ADP employment change. First week of the month usually is non-farm payroll. This is employment data. It's supposed to rise 63,000 to 80,000, right? And that could be a negative for the dollar, positive for the euro, the Aussie, and the Kiwi. U.S. data, usually good U.S. data, is bad for the U.S. dollar. Retail sales year on year is supposed to drop from 3.2 to 2.9. Retail sales month on month supposed to rise from negative 0.2 to negative 0.1. And then the ISM Manufacturing Survey PMI, Purchasing Managers Index, supposed to drop from 52.4 to 52. And then we have balance of trade of Australia, the Australian flag, is supposed to rise from 2.631 billion to 2.7 billion. That should be good for the Australian dollar. Again, good news for the Australian dollar, or the Australian economy is beneficial to the Australian dollar. Initial jobless claims supposed to actually rise from 210,000 to 213,000. And this could be impacted by the TSA layoffs, but that's going to this is going to be April from a March number. Okay, so we'll see how that impacts that. And higher jobless claims would actually benefit the U.S. dollar, and I would actually look at the dollar yen for a possible trade. Friday, lots of U.S. data, a buku amount of U.S. data, with average hourly earnings month on month supposed to drop from 0.4 to 0.3. Non-farm payrolls. The previous number was we lost 92,000 jobs, and looks like we're going to gain 50,000 jobs. Which is really remarkable, because typically non-farm payrolls on average, we were creating 200,000 jobs a month, and now we're accepting 50,000. In fact, I'll show you a chart, and you can see that since COVID, we really haven't see we had 300,000. But can we go back? Oh, there we go, back, right? I mean, COVID, we just lost a ton of jobs, but typically we were 145, 158, 164, 160. This is 2019. We're creating 158,000, 150,000 jobs, right? 180,000 jobs. Here we go, 175,000 or 273. Look, the actual 273, 225, 266, 128, 136, 130. And then COVID, we lost 20,000 jobs, right? And then if you look now, we are at minus 105,000. And then, here we had 315,000 jobs, right? So non-farm payroll is very important. It's one of the most widely watched economic announcement. Why the U.S.? Well, we're the largest economy, and we're 80% of our is consumption. We consume stuff from around the world. And so if U.S. people don't have jobs, they can't buy stuff, that's going to impact factories in Germany, China, all around the world. So that's why traders around the world pay attention to NFP, non-farm payroll. And so 50,000 jobs, that's like, okay. Unemployment rate's supposed to rise from 4.4 to 4.5. ISM services PMI comes out as well. And so 56.1 is supposed to drop to 54. Okay. And so with that, that will be the wrap for the economic announcements. And looks like the U.S. dollar, I would actually trade the euro, the anti-dollar. Euro is considered the anti-dollar. And so if we have negative news for the U.S. economy, the euro will usually appreciate. So that's what we're looking at. Okay. So let's go ahead and go into the charts. Right. We actually can go to the charts from we can go trading view. Right. And we have a tab here. And then we'll start with the US dollar index. We can start with the US dollar index. And that's DXY. That's a basket of currencies versus the US dollar. And we have to pitch this into a single wall indicators. Okay. I usually like starting with the higher time frame, like a monthly or weekly, and walk our way down, and we can see we have a 50,000 foot overview of what's going on in the markets. Right. U.S. dollar index, as we have noted, is we do have an uptrend that has increased in velocity, right? And then but it has pulled back. We had a typical ABC correction, 3-wave correction against the trend. And so now after having stubbornly high inflation, which drove the currency up before, right, under the Biden administration, we had 9% inflation, and so we hiked the Fed hiked interest rates in order to fight inflation, right? So that's a typical correlation of hiking interest rates to fight inflation increases the value of the currency, right? And then after that, we saw a 3-wave decline. Typical 3-wave decline, and then now we're starting a resumption of this uptrend, right? And if it does, we could see a much higher move. Okay, so currently we're trading at 99.88 on the dollar index. The dollar index is very important because think of it as even though ticker symbol is DXY, it's really USD, right? So DXY JPY, GBP DXY. EUR, DXY, we're all trading against the US dollar. Dollar is going up, other currencies are down. You can see they're all in the red, while the dollar index are all positive, much like the heat map. Let's drop it down to a weekly chart, and we can see we got a nice bounce from this 96.73 area, right? And let me just move this out of the way here, right? And right. So we're in an uptrend on a weekly chart, daily chart, also making its rounds to the upside. Continuation of this uptrend after a brief pullback. We had a brief pullback here from the top of a 100 spot 59 down to the 95 area, right? So now we're rebounding from that, resuming the dollar march higher, right? We bounced off of a Fibonacci area, near the 38% retracement. We can see a move higher, and that move higher would translate into lower values in anything, whether it's Bitcoin, gold, silver, natural gas, copper. When the dollar is strong, all these commodities are priced in U.S. dollars. Oil is priced in dollars, except oil. Okay, oil is as an exogenous event, the war, but everything else is tanking. Excuse the pun there, right? All right, so let's fill up on some more data. We'll go down the 4-hour chart, and we can see that we're marching higher. Another uptrend as well, right after our corrective trend. So bulls versus bears, U.S. dollar index, we are bullish. Okay, so let's go ahead and go to the anti-dollar. Let's go to the euro, EURUSD, right? And it's been taking on the chin lately. We're gonna move all the drawings. Let's get down to our monthly chart. And you can see this big red candle there. We actually had a subtle uptrend, higher highs and higher lows. But if you look at it in the broad scheme of things, we are in a triangle, a giant triangle. Higher. We do have some higher lows, but we do have a lot of lower highs. But we did have a trend line break, right? We had a trend line break, but if we draw a secondary trend line, price did reject from that trend line. So we take another trend line off the top of that, and boom, right? But we do have a rising trend line. We have a rising trend line. So you can see the market really is trending within a certain area, and then we can see that we are we're finding some support here. Unable to make new lows, though. I mean, we're 1410, right? And this also is probably a fib, a confluence, right? We want to see we're at the 23% retracement, the green line right here. I'll zoom that up, right? So we are. I'm going to tighten this line up too against the wick. Really can't draw a line there. We actually need on the closing candle. And the last closing candle we had was here, right? So actually we'll be drawn here. We have to wait till a new candle to form before we can actually draw a trend line on that. But I can draw a horizontal line, right? Because we could see a bounce from this area. Long wick buyers stepped in. Buyers stepped in from the 1 spot 1403 area, pushed price up to where it currently is trading at the 1 spot 1534 area. So buyers stepped in and pushed it up some 120 pips. That's so even though this is a red candle, a long wick, this is a hammer. Hammer formations are usually bullish, right? We're short-term bullish, but let's go down to the weekly chart. We also have price consolidating there. Tweezer bottom. Tweezer bottom is usually bullish. Small body Harami, another bullish candlestick pattern on the weekly. Daily, on the other hand, lower swing highs, lower swing lows. We want to see a break of 116.37 to be bullish. That's where we would see. So I'm short-term bearish, medium-term bullish, longer-term bearish. So, I mean, because we've got support, lots of support. Well, nice supplies, demand zone right here at this in that area, and we just bounced off that. So we might get a 3-wave correction against the trend. So I'm actually going to, this is a riskier move without confirmation, but I'm going to be cautiously bullish. Cautiously bullish, unless we break the lows of 1403. And I've taken a couple of trades short, and That's my name on the wick. I got stopped out. So I was flipped around, I got long, and everything was fine. Okay. Let's go ahead and go to drop it down. We can drop it down to a 4-hour chart. And you can see we've topped out with high, but we have like these higher lows. And again, we need to break 116.20. Okay, pound. Let's go to the pound. Pound's getting pounded, but it's been holding up even though the dollar index has been racing higher. And so this is we start our monthly chart. Again, we walk it back. Still got those lines there, right? And move all that. Move our Lumba. The pound dollar, move drawings, right? And you can see we were on our monthly chart. We have a similar move, but we have like an inverted head and shoulders, and so you just wonder, the moment we find out that the war is over, you probably expect all these currents. I mean, these gaps are going to come into play, where we have these big, fast moves down in the currency, and we could possibly see a big ramp up if we get news, right? We're at I call them the Waterloo Napoleon point, where actually when the Rothschilds knew the war was over, they were already buying into it, planning for to take advantage of this move, while everyone is bearish and selling. We're finding all this support down here that eventually, still won't be early to the party, right? But the people are saying, "Oh, the Iranians aren't really negotiating," and it's like, I wouldn't bet against Trump, right? You try to bet against them on the tariffs, and bet against them. I mean, they're like 0 for 9, right? So, so we get any inkling of the war getting over, this is going to shoot up so fast. It's going to be incredible, right? It's going to be huge. It's our president would say huge, right? We would see a rapid move to the upside, right? And then from a time, a Fibonacci time. Do we have Fibonacci time on here? Yeah, let me find it. Yeah, our Fibonacci time zones. There's something, when you take we take time involved in this, right? We're coming across every we would come in somewhere over here, right? For our time sequences are like lining up for a possible breakout to the north side, right? Okay, but we talk about that in mentorship, but I don't have time to really go into Fibonacci time. All right, let's go ahead and weekly, right? And then weekly is down. We had double top. Double top price target is $29.99 right here, right? We had double top right here. Our double top is in. All righty. Okay, we got the double top. All right. And typical double top is here, but we're not there yet. The 29.30 small body candles on right there, doji, tweezer bottoms. I would be short-term bearish, medium-term bullish. Again, the war could be over in a matter of days, guys. Matter of days. We're coming up on April, and it's like April was when we had Liberation Day. The tariffs were initiated almost a year ago around the same time, right? And the next week would be, the year of the annual anniversary. I wouldn't be surprised if this becomes some type of an anniversary event where the 1st of April, we see this a news of some type of change of regime change in Iran, or some type of settlement, or some big slapdown, which causes this to take off, right? The rate of change, one of the principles that we teach at Elite Traders University is that if there's a change of momentum, there's a change of momentum before there's a change of price. And we use the predictive function to game that. That's how many of our traders are able to pick the bottoms and tops in markets, right? Using that method. And so this is like one of those watershed moments where we could see a huge turn, right? We had one. This is one we did this morning. That's why bulls versus bears was late. We were trading the dollar yen, and we had this turning point at the support zone, but we took it short from a resistance zone, and that zone was so strong that price just went up. And in fact, where we are now, we are at 159.70, 172 on dollar yen, right? Why? Because of in fact, I'm going to close these trades out. In fact, I have these trades right now that I'm going to go ahead and close out, right? Woohoo! There we go, right? I reminded myself I had those trades open. Okay. So, cool beans. I got another. Hold on, guys. I got another account I got to close out here. Right. All right. We can close this one out too. Right. Okay. 59.71 by 72. Nice. Okay. So we are seeing something maybe happening here, right? Daily chart, right? Might have one more push down. Support comes in at about 130.84, and that could be the end. We have double bottom here, and we have a triple bottom and a trend line rise. So I'm short-term bearish on the pound dollar. However, we get down to this area, I would load the boat. I'm looking for back up the beep beep beep, back up the truck. Bye. If we get back in here, okay. Let's go ahead and move right along. Okay, let's go to AUD USD. Similar thing. AUD USD will probably move a lot faster. In fact, it's setting up now. Okay, so you can almost see in the charts, news before it happens, right? It's almost like you can see it. Look, we have the Australian dollar. We had dropped down to 5,900, whole number, round number. So even though we had support back here, of course, and that long wick, been bullish against that wick for a while, and then we have the support here, but we have this uptrend still, a very in the face of this giant older downtrend. It doesn't seem like much. I tell you what, if you shorted this, you probably were not doing so well, right? Well, we don't have a candle. Yes, we do. We have one candle there, right? But we have currently what is going on right now is we are rallying, and we rallied up against this area, and now we are making our comeback here. Those wicks were bearish. Drop it down to weekly, and you can see that we've turned down from those highs, right? We had the resistance here at the 0.7188. When I draw resistance, I usually try to tag the last wick, right? And avoid going through candles. Sometimes you can't avoid it, but you want. Some traders do it across through candles and stuff like that, but that's not what I do, right? And so now we're pulling back, but we have a uptrend with a pause or retracement going on right now. And the typical pullback is the 30% retracement, 66.97. Currently tagged at 23% retracement. I can enlarge that for you so you won't have to strain your eyes here, right? And we can see price has moved down to that 23% retracement. Long wicks on either side. Buyers stepping in, sellers stepping in. A lot of indecision here, right? And so we have a pennant. We have a pennant formation, right? Not like the Dodgers winning the pennant, but it's a pennant. And so we're looking for a break outside. We get above 70, 68. I mean, higher highs and higher lows. We are in an uptrend, even though the smaller downtrend. We have a smaller downtrend here. Go down to the daily chart, you can see it's pretty vicious, right? The pullback, and no rebound. We got a little bit of wick there, but you can see that after the big pulse moves, we're getting smaller body candles, showing we have a slowing momentum heading down into this area. We also have old support as well, and maybe we are teeing up for a possible. I'm going to take this trend line. I'm going to recycle it and trend it down. And hey, if you see a break, if I see a break, I know what I'm going to do. If I see a break above here, I might put a little toe in the water for a move back up to 71.88. But based on the current trend channel, the trend channel is down, and so lower highs and lower lows. I'm bearish. I am medium-term bearish. Actually, shorter-term bearish, medium-term bearish, but short-term or longer-term, I think we go back up. When the war is over, this will probably be a big gainer. All right. So actually, I only need one bear on that one. Let's look at dollar CAD, USD, CAD. You know, it can be a real yawn. Sometimes it moves, right? We got news. Oh, there we go. Now it wants to move, right? It says, hey, Greg, stop lying on me. It's like, dollar CAD, you really haven't gone anywhere, right? I mean, even though it's a dollar pair, I mean, these we have rising lows and lower highs. Actually, kind of like the same highs. We have same highs, rising lows. Actually, that's bullish for the U.S. dollar, right? We have that type of because we do have a higher high, higher low. Uh-oh. Something went on. What happened here? Ooh. The what you call it? We closed an order out. Our dollar yen closed out at 74. Nice. We had another we have a bunch of accounts going on right now, right? Yeah, so that was cute. We got long at 67, got at 94. Yeah. All right. Dollar CAD hitting support, seems to be rallying back up, and then so we are actually bullish dollar CAD without further. You know, even though oil is, they've been dumping oil, and that's going to hurt Canada as the price starts to fall. But we're getting some movement there. So bulls versus bears. I am bearish Canada, but I'm bullish dollar CAD, right? Okay, but I know you guys probably want to get into the indices, right? All right, let's go to gold. Let's go XAUUSD. This could also be a benefactor, or benefit. Oh, okay, okay. I'm gonna remove all the drawings here. Right, there we go. Go out to that monthly chart. There we go. All right. Higher highs with this baby. Look at that long-legged doji. Indecision. But zooming in, that weekly chart, we got a pullback, a very strong, sharp pullback, the biggest pullback that we've had since the beginning of this run. But if you put a fib on it, right? Since and I'm actually going to use this base here that we had back in 2015, where the run actually got started, and take it to that high. We're closing in on the 38% retracement of this move, right? I'm trying to not to get you dizzy. But, all right. So the 38% retracement comes in at 38.74.79. Buyers stepped in here at the 408.9 spot 94. So long wicks are typically bullish, even though we have big, strong red candles. Lots of interest, whether it's central banks or hedge funds, they're buying gold on the dips, right? So we see our daily chart there. And again, we almost got to the 38% retracement. Don't know if price wants to do one more shot. If we can stay below 46.12, We're bearish that we could see a move down to the 38.44 area, which is an old low that we had from October 28th, 2025, guys. And so a way of calculating that, we can take a dip expansion going from the high to the low and pulling back up. The 100% expansion, 405,921. All bets for the short might be off. Bullish against this wick, right? But I would need a break of 45.73.47. If we close above that, then we're in bullish territory. Or we finished an ABC correction in a very powerful, epic, historic uprise, the highest price in humanity for gold ever in this civilization anyway. But there we go, right? And so we can start a new impulse wave that would take us far above to the 6,000 area once we crack that, guys. So taking shorts against this is risky. And I think there are a lot of smart people that know that the war is almost over, and they are already positioned themselves for a blast-off move to the upside, loading up on risk asset currencies. I actually want you can check the CNBC VIX index. I could probably find a chart there, but if we go here, see, well, the VIX is actually, okay, the VIX is high, right? This is the fear index, is at 28, right? What's the highest it's been? It hit 30, right? Where is that? Okay, we're at the VIX index. We hit 29.49, and you can see this is a 3, a 4, and a 5. We hit 30 on the VIX. That is like the peak. That's the extreme blood in the streets. Everybody's afraid. Everyone's buying puts and protection and getting into the dollar. Usually hits 30 on the VIX. That usually means we got as high during the tariffs. We got as high as 50 on the VIX, right? But typically, a move around the 30 area, there's lots of resistance in this 30 area. And so that usually marks the end. The worst possible scenario for VIX is usually the best scenario for reversal, right? So we double top at 30 on the VIX. Then the investors, Barclays tells investors to keep climbing that wall of worry, right? And the Dow is surging, right? And we had, okay, well, Dow falls 500 pips. So watch. Tomorrow is Friday, and we'll see what will happen on Friday, right? But everything is setting up for a possible move, right? XAG USD, we were punching support. Same thing. We had some a support level here, and we punched through it. We got down to 60, 67 on the silver, and then we had a rise an A or 1, B or 2. Will we come back and test it? Could be, but if it's acting like gold, then it's probably setting up for a launch higher, right? It's probably setting up. We did punch through the support, and we could see a move higher. But this level has to hold, right? This is the line in the sand for physical silver. Physical silver 60.86 is the line in the sand. If it doesn't do that, then the next stop would be down here at 54, right? And then we have further downside to 45, right? So we've got a couple of things going on. If we get a close above 74, we could see back to 120 again. But again, I think everything, the war is the key. And so watch where the big money is flowing. Bulls versus bears. I am probably shorter term bearish, but medium long term bullish. It depends on how long the war goes. If it drags out for another couple of weeks, this could go lower, right? But again, if you have strong hands and you can hold it, then that might be something. But again, not investment advice. You got to do what you can do with your with your risk appetite. Okay. We did let's go to SPX 500. I'm going to use CFD, but a lot easier to look at. S&P 500. Come on, baby. Show me the money. And look at that. And we remove all drawings. We had a flag. It broke out and then dropped. Let's start with the monthly chart. And again, like gold, epic rise in the S&P. But after these drop moves, buyers stepped in. This was a full-bodied red candle. If you want me to draw a little illustration here, if you permit me, we had make this red, right? So this is a full-bodied red candle that dropped right down here, right? The bears are high pawing each other. They're thinking about what kind of cave, a new cave, more berries, more honey, and then all of a sudden, bam, buyers stepped in, and this long, full-bodied candle turned into a wick, right? Bam, slapped, bam, right? And then it turned green, right? And then went up, right? So when you see a big candle like that, a long wick, it's not bearish, it's actually bullish, right? Same thing happened here, right? We had a full-body bearish red candle, right? And forcing buyers out. They liquidated, and then buyers stepped in and go, look, this is cheap. $63.99 when it was $7,000. Oh, I'll buy it. Bam! Buyers stepped in. And so the next candle or the next month, which is April, comes up, we'll get a candle. If we get a green candle inside body candle like this one here, look, this one happened on May 1st, right? And then so we could see, let's go to weekly. Weekly doesn't look too happy though. Weekly is dropping, right? It still looks bearish, but we can take a Fibonacci and try to see how long will this drop continue. And we're at the 23% retracement, just like we were on the other instruments. 38% retracement is at 6,192.10. We can see a pullback there until then because prices seem to be we're getting some little actual price action here. We had a couple of buys, but then bam, that was wiped out by a sell, right? 4-hour chart, right? Again, we had those buyers, but that long wick, same thing. We had a bullish green candle. The bulls are high hoofing each other and knocking horns and figuring out how much hay they can buy, and then bam, rejection, right? So this is bearish, right? So we can see a further move. So S&P 500, I am short-term bearish. Again, we break this downward trend line anytime in the future, this will probably open up the 7,000 area and beyond, right? This will be like think of the tariff, what happened with the tariffs, where we had that big drop in the tariffs. And when that news turned around, it made many people very, very rich, okay? So don't be a panicking. If you have diamond hands and a diamond account to be able to hold positions, or if you are skilled at options using puts to protect your portfolio, that may be something if you don't want to liquidate assets too, right? Again, consult your financial advisor. I'm not a licensed professional, but you can find a licensed professional that can advise you on that, right? Okay, let's go ahead. S&P 500, the NASDAQ. A lot of you guys like NQ. NQ, please. All right, NQ, NASDAQ, S&P futures. Again, we have big, giant move up. I mean, these epic moves, parabolic moves, right? And then we have these short pullbacks, right? And so, this was the panicking. We had this is the tariff move, right? Go up 12, 12 candles, boom, right? But we did have 2 months of drop before we had a recovery, right? But again, we are probably looking at a possible repeat of history. If you don't learn from history, you're doomed to repeat it. NQ, Still pulling back, and the weekly chart still looking bearish. 38% retracement is at 22,620. And so bulls versus bears, I am bearish. Bearish this market. Okay. Let's go ahead and let's look at oil, right? I'm going to go UK oil because that's the one that's tied with the Persian Gulf and the Straits of Hormuz. And you can see that on the monthly chart we have surged huge, right? And we have a really beautiful ABC pattern. Not beautiful if you're trying to fill up your tank. It's kind of ugly if you're a truck driver. I was in California and I saw $6 and $7 diesel. $7 diesel. Right? So you figure those are big trucks. And I filled my car up with premium. It was $6.90. No. I actually got $5.75 for premium in California. And it was $97 to fill up my Beamer, right? And I still have that gas in my car. Make it last. I still like econo mode, right? Use up that gas very slowly. There we go. I'm gonna get 30 miles to gallon on that tank, right? I'm gonna will it into existence. Here we go, 618 double top. We can see another 130 back to 132 in the Brent crude, right? And if we have a Fibonacci expansion, we can see 178 on the crude, right? I figure if a missile, God forbid, a missile hit a ship or something like that, then we would see a real sharp move to the upside there, right, for Brent crude. Bulls versus bears, I am bullish. Though we got a long wick, right? We do have a long wick, right? Let's walk it down. You can see it stacking. Candles are stacking. Pull back, an extension, right? Pull back, an extension. Pull back, an extension. Yeah. So oil is something that you can trade, right? If you want to trade oil, I can show you how. This type of oil in the chat, and I'll get you some information out. Okay. All right. I think we covered Bitcoin, BTC. You guys want to talk about Bitcoin, BTC, USD? I'll use the Bitcoin index, and we can take a look at that. With all the geopolitical stuff, the Bitcoin is kind of like the crypto, and also some crypto legislation that got overturned. That's actually bad for crypto. But again, we have we're hovering around, we're a pullback territory. We dropped the 38% retracement, pull back to that was 82,768. Blew through that, blew through the 50% retracement, got down to a low of about 59,750. 618 though comes in at 56,252. 56,000, and we can see lots of support here, right? We're at 60. I mean, we've got to drop out $10,000, right? But we're in a downward channel. Small body candles trying to get up out of its way. Indecision. We could break south very quickly. Daily chart. The dollar remains strong, and the dollar continues to remain strong. Would continue to put pressure on Bitcoin, right? The digital gold, they called it, right? But it's getting hit like all the other assets. And look at what we got here. We have a head and shoulders pattern on the 4-hour chart, and that the head and shoulders pattern is a very bearish pattern. If we can find it here, right? We got it right there, right? So you got your top shoulder 74,008 to a pullback to the neckline that's 66,373. To our high from March 16th, 75,913, down to a low here of 67,394.24, and up to our high shoulder 7206, right? Okay, so now you have the head and shoulders pattern, lower high, and we have our neckline drawn. The way we calculate, we can use a head and shoulders pattern to actually figure out how far this could go. A couple of ways we can do it. We can take a a measuring objective from the top of the head to the neckline, right? And then we clone that, take that same measurement, say the same height, right? And we project that from the breakout point, and then draw another horizontal line, and then you can see that we have a price objective of 58,874, right? So it's about almost a little less than the $10,000 move to the downside, right? That's one way we can figure this out. The other way is to use Fibonacci expansions. We can take the high of the head to the neckline to the top of the right shoulder, and we can come up with Fibonacci projection 63,380, which also coincides with the lows of February 23rd. The 127 extension takes us down to 61,034.79, which is near the low of February 5th, 2026. Our 1.618 expansion takes us to 58,050, and our 2.61 expansion, which would be usually we'd stop at the 1.618, but we could extend lower, right? But the physical or the common or classic support target comes in at 60, the old low from February 5th, 2026 at 60,247, right? So any event, this is all bearish, like, do you want, how far bearish will we go, right? With basically a bear flag. This is like a huge flag, right? Right. And then you could also take the extension from the top. You can take this whole area too as another, which is would be extreme bear scenario here. We take that flag, this is the flag pole, and extend it, and then we get ridiculously low prices, right? We get back down to 30,000. We go to 30,000, then it would probably shed a little bit of doubt in the future of crypto, right? Anyway, those are just my projections. Okay. And with that, I want to thank you so much for being part of our broadcast. And I'm going to just make a quick check over for any. Hey, there's Sean. I see him looking at the chat right now. Make sure you come over to our Pip and Run trading floor here in the school community. We have all kinds of stuff going on there. Lots of goodies. We have our classroom where we have courses, baby pips, Forex Foundations, freshman course. And if you don't know anything about Forex, this is a great way to start. Baby pips, 16 videos. Each video is probably about 2 or 3 minutes long. So you can go through 16 videos, guys, in about a half hour. You can learn Forex in a half hour, right? And then come over and after you go that, there's other courses as well. The Forex Foundations course, a little bit more deeper, right? And then we have also our strategy course made by one of our millionaire traders, Svetlana. She did the Samurai Sword opening range breakout strategy. You get access to that, all for the price of a latte, right? And also you get part of our community, part of our exchange ideas with traders from around the world, okay? So also take a look at Elite Traders University if you would like to look at ways of improving your trades, working with me more closely, and that'll be very cool thing too. Let's Trading Heroes. This is Trading Heroes. Not that one. There we go. All right, Elite Traders University, your number one community for learning about the markets, and you can sign up for our free master class as well. A special gift to you to help you in your Forex trading and your trading journey. Okay. Thank you so much. My name is Dr. Greg McLeod. And again, I want to thank you so much for being here. Talk to you later. Cheers. Peace and pips.